Morning, everybody. It's 10th of Feb. We are Signal Centre Talking Ball. I'm joined by Steve O'Hare and Ian Coleman. Morning, guys.
Morning, all.
Morning.
Nice to have you back, Ian.
Nice to be back.
After yesterday's snow escapades. You're digging out the car, having to take the kids here, there and everywhere.
To get Charlie to work and Woody to school.
Oh. Do they not have a snow day?
No.
How's your dog, Steve?
Yeah. Bar humbug. What dog?
Not mine.
Mate, I can't hear it.
Okay, pretty quiet yesterday.
I probably saved people a few quid not coming in, actually.
Well, we only did a sort of fairly broad look at the FX markets yesterday. I was just looking at a few of the baskets rather than going into the individuals. Not really much on the news front from what I can see. Obviously, we had the second impeachment trial of Donald Trump, which got underway. Nothing conclusive from that. We've got chat about reopening various parts of Europe as a result of the numbers declining. Germany are talking about gradually reopening shops and hotels next month. We've obviously put some processes in place for new people coming in to the country or trying to leave the country, some pretty heavy fines and also some pretty hefty hotel bills if you want to come into the country as well. Feels like we're a little bit behind on that and seems like a bit of a knee-jerk, because surely we need to be doing that months ago rather than now, which hopefully is towards the end of the pandemic.
The thing was, people were coming in from Dubai, weren't they? Going to holiday in Dubai and then going through Dublin or something to get back and not quarantine.
Right.
They're talking about. Charlie was saying last night, my eldest, he said that he'd seen on the news that they're talking about a 10-year prison sentence if you.
Yeah, that was mentioned. It's pretty strong, isn't it?
If you what? A 10-year prison sentence if you what?
If you try and swerve into the country without doing your 2 weeks.
Oh, do behave. They can't even organise fines in the street, so they're never going to organise that. What a load of rubbish.
Maybe so.
Prove it. Prove it.
Prove it.
You'll never take me alive.
Yeah, exactly.
Anything else on the news? Not really. Twitter on the earnings front came in better than expected, or topped estimates, although they did say that they projected fewer new users throughout 2021 compared to what they saw in the pandemic-fueled surge last year. In terms of economic news, we've got hopes of the US stimulus being approved. We're no closer to that at the moment, it seems. And we do have today appearances from the Bank of England Governor Andrew Bailey and the Fed Chairman Jerome Powell, which could provide a bit of a central bank theme later in the day in what has been a very quiet week so far on the economic news front. So, as I said yesterday, we had
keep going up.
Yeah, we had a fairly broad view of the FX markets yesterday. We've got Ian back today, so hopefully you can run through what you've seen on the charts. I don't anticipate it'll be an awful lot because there's not much to say by the looks of things. But
it's all just been driven by the dollar, isn't it? Really, I mean, I think sometimes you just have to go back to sort of big picture analysis. So this is sort of the weekly chart. We got 5 waves down as far as the Elliott wave is concerned, and then we've had, if we go to this chart, we've had this choppy 3 waves to the upside, which basically means 3 waves up, 3 waves down, and then normally 5 higher. So it's basically trying to pick that bit, really, is the next challenge. And with that, I think a lot of people have sort of been wrong-footed in the majors, because obviously they're looking for euro dollar to roll over and continue lower. So it is going to be messy, and it's going to continue to be choppy, at least until we finish this pattern. And this is sometimes when cipher patterns or fib levels, etc., come in quite handy. If we go to this chart, which is just the hourly chart, we can see that we're driving lower quite impulsively. That could be seen as a reverse head and shoulders to left shoulder head, which obviously flipped the daily reverse head and shoulder on its head, literally. And this is the previous swing low. So I'm wondering whether or not we're going to sort of drive down, this looks like quite a nice wave pattern. So 1, 2, 3, 4, drive down, take out the previous low, but just spike down to this 261.8% fib, which is located at 89.90, and then start that next leg higher. So that would potentially complete leg A, down to 261 below this, and then drive higher in leg B. A few people might think it's head and shoulders. This obviously would then be a prime area to look at, and then a drive lower in leg C before we get the impulse move to the upside. But like I said, I mean, I don't think this has been driven really by fundamentals with regards to the strength or weakness of the US economy at the moment. I think it's all to do with stock indices, and stock indices could just keep on pushing higher. So one thing I was going to say, the outside candles seem to be working extremely well. So you've got a bullish outside day here, which was last week on the 5th of Feb, and then we've just driven up. Similar picture to, well, opposite to the dollar index. We've got a previous swing high here. These fib levels look to be holding pretty well. I thought we might pause this morning. We've got a 88.6% pullback level at 121.33, but we've pushed through that now. Previous swing high here, and then a spike through to take out the 261.8% extension at 122.17. So I think at the moment we're clearly having higher highs and higher lows, and I think it's just buying dips until we get up to this sort of region. Cable, again, sort of reflecting on the big picture. I think this is a sort of 5-wave pattern. We've got a confluence area up here at 139.72, but I'll just concentrate on the dollar index really. There's another potential cipher pattern here at 138.75, but I don't think that's going to hold. Dollar Swiss. What was I looking at in here? I thought this reverse trend line support might hold. So remember, we had this confluence area, but then we've had this impulse move to the downside. So this is sort of, again, a perfect reflection of what's happening with the dollar, which will show that it's really not being driven by single currencies. It's just been driven by the dollar at the moment. So up in 3 waves, and then potentially taking out again this low trade that's coming in at 88.40. If we go to this chart, we've actually got a 261.8% at 88.68, but that won't be enough to break that previous swing low. So it won't count as a BC leg, or a, yeah, that's correct. Dollar yen, again, big picture analysis. We talked about this being a 4th wave. We had a 38.2% fib, so we're now potentially driving lower in the 5th wave as far as the daily chart is concerned. Shorter time frames really sort of don't look like this is putting back again. I don't think this is mainly on dollar weakness, not on yen strength, because stock indices are moving to the upside. So if stock indices were moving to the downside, then this would be yen strength, not dollar weakness, if that makes sense. And again, just pushing through fibs. So until we get at least a change of lower lows and lower highs, I think the call is just to sell into rallies. Dollar CAD is quite an interesting one. We talked about this for a while, which was a potential a reverse head and shoulders pattern. So left shoulder, head, right shoulder, close to a 61.8% fib. If you remember rightly as well, we did turn around and said, well, it could possibly push further through, because we haven't got any bespoke support until down here, which is 126.14. That's near an 88.6% pullback level, which makes us the what leg is it? Which makes the BC leg of a cipher pattern. So if that gets down to there, then it really does offer quite good risk reward, because your cipher pattern takes you well above this previous swing high, which is at 129.63. Just hitting a trend line resistance in Aussie dollar. If we go to this chart here, we can see that we've broken this trend. We've got nothing really in the way of resistance until up here. So if we just pull this chart in a bit, I'm wondering whether or not it's going to sort of come up to take out weak shorts up here, and then potentially sort of come down and then make some sort of head and shoulders, but it's far too early to tell that. But this would suggest that stock indices, the rally in stock indices, is anything but over, because obviously Aussie and Aussie yen have a tendency to follow stock indices pretty well. Euro sterling, and again, big picture, we look like we're sort of moving lower in a fifth wave. We've got a confluence area down here, which we've talked about before, 86.33, 85.84. We did mention that swing low as being a potential resistance level, so it was supported, then becomes resistance, and that's got held quite well. I don't think there's anything really to deter a stronger move to the downside. Euro yen's a bit here, there, and everywhere really. I'm sort of looking at this chart. Over the long term, I think it's going to go lower. I think on an intraday basis, this is looking quite good, this 61.8% fib. And on my little system that I'm using at the moment, it did give a sell signal on a medium-term chart. It was actually an 8-hour chart. That's where the signal was, but the actual entry was down here. So don't think that it gave a signal to get short at the top, but basically indicating that rallies should be sold into. And again, I think that's going to be driven down by yen strength, not euro weakness. That's me done.
Ian.
Thanks, Ian.
Steve, what are you seeing on indices and metals this morning?
I'm sort of really taking it back to a daily chart, a bit like Ian. There's a lot of intraday noise going on, and spikes here, there, and everywhere. But really, the trend is higher. I just wanted to sort of give a couple of different reference points for the bulls and the bears out there. FTSE, we are in this wedge higher, still a long way from the all-time highs, and we've seen this support come in around about the 6,300 level, and prices have reacted nicely once again off this level. The previous swing low came in at 62.46, and we found support in front of there at 63.11, and it's held twice. Obviously, from a bear point of view, you could be looking at this and thinking, hang on, are we in the early stages of a inverse early stage of a head and shoulders formation? Potentially, yes, but don't get your hopes up too much. Although FTSE is one of those markets, I think sometimes that goes against the norm. So if we are in that sort of formation, we could look to see resistance coming in around about 66.30, about 100 points higher than this, and look for setting shorts around there with tight stops. But be very careful trading that, because it's not formed until it breaks the neckline, and then you can get all excited and giddy and potentially see a move down to the measured move target will be around about the bottom of this upward trending support. So that'd be quite nice. We're seeing a wedge as well in the DAX. Obviously, that's above its all-time highs recently, new all-time highs. But again, it seems to have stalled at the previous swing high or close to it. So potential for a double top formation if you're a bear and looking for some sort of relief. The bulls are just buying dips. So the real level to watch is the neckline here, 13,265. Which again is 750 points lower than where we're trading, so nothing to get excited about. But if you zoom in, you're seeing a little bit of a topping formation. We talked about the doji yesterday. Almost looks like a shooting star type doji, long-legged doji, whatever you want to call it. So quite like that. But as we say, that the US big brother indices seem to sort of like be dragging the European and UK. Well, also the Asian Pacific indices are dragging us up. We don't seem to want to go up. We seem to be a bit more sensible than the numpties from across the river and in the Far East. Anyway, that's just my opinion. The CAC again.
Casually offending everyone there.
Yeah, just in case anyone's watching. Just seeing this again, the potential for a double top formation. We're in the wedge. The wedge is the thing that sort of like makes me continue to think that we need a deeper correction before prices continue higher. Not everyone thinks that, so that's fine. I don't care. So double top and neckline here, 53.68. So again, that's a pretty long way off before we get to that. So again, little bit of indecision at the top here, so beware of that. Again, wedge in the Dow, all-time highs, so doesn't feel like anything stopping it there. I think that's the 7th. We're into the 8th positive day. Normally you get 9 before a correction. The candles are getting smaller, so the momentum is stalling, so you're getting bearish divergence. So potential for a turnaround. I don't know what the catalyst will be. That's the problem. You go to NASDAQ and there is no real, obviously, again, looks a little bit bearish divergence type candles. The ranges are getting smaller, so we need some sort of correction to flush out whatever's in there that's slowing it down before the buyers come back in again. Again, S&P trying its best to push towards the 4,000 level, which is a big round psychological number that a few people are talking about. Jumping onto the Aussie 200, the wedge is a bit more evident here. Obviously, this is holding up quite nicely. It's obviously a very commodity-based indice, so commodities are doing okay at the moment, especially the oil. But I suppose gold as well is holding. So that's good for the Aussie 200. Might have just made that up. 7,205 is the looks like the all-time high there. The Nikkei, we've got a couple of channels here. We've got a bigger channel which is quite interesting, but we've seen this sort of acceleration higher more recently. So and that's forming a channel as well. No real sign of a wedge. So looks pretty good. Obviously, China's economy expanding really aggressively as well compared to the rest. So that's pushing above the channel top. So quite exciting for them. Hang Seng really isn't sort of telling me a lot more, although we are approaching 30,300 area as a significant potential resistance. So we'll see how that plays out over the next couple of days. That's the indices. We'll look at commodities now, just really sort of focus on gold because obviously it's quite an interesting product always to trade with retail. We go back a little bit towards August last year. We had this big swing low from the all-time highs, and we formed a nice bullish hammer here. And then we found better support a little bit lower around about the 1,848 level, which is quite a significant number in my eyes at the moment. I think it's quite pivotal. Twice here now, and previously it found a little bit of support when it was trying to break down through it, which it did break down through it, but failed to get below the 1765 level. We made a low at 1785, and we've rallied higher back to the 1848 level, which it stalled at yesterday. So a little bit of a pivot level on the short-term basis. Above that, we've got resistance at coming in at 1875. So I think it's quite nice to trade around this level, the 1848, sell in front of it with a tight stop if it goes through by looking for a retest of the 1875. So a little bit of two-way opportunity there. And finally, copper, just call a copper. It's just going bananas. Go on, my son. Go on. So yeah, lots and lots of interest in copper. It's just pushing higher and higher as China expands and reopens and uses all that copper to make all the nice things that we like. Now, one interesting topic, just changing the subject a little bit. What was the most bought kitchen item in lockdown?
Whisk.
Nope. I'm sure you've got one of these.
Oh, fucking, I can guarantee it. Bottle opener.
Good one. Bread machine.
No, I haven't got
really?
one of them.
Fastest growing category, up 650%.
No, not got one of them.
Who makes them?
Yeah, well, we can obviously we need another sort of session to go into that, but the real things that grew highest were that disposable gloves were the top one, 670%. I'm sure masks must be incorporated into that somewhere because it doesn't show masks. We've got a nice little graphic. I'll show you. You like that?
It's like Fibonacci.
We actually bought that magazine. Have you bought that magazine?
This, a little plug for the little book of data from Aviva.
Like that.
And in it,
nice
you've
graphics
got,
here.
yeah, I'll tell you what, Joe, I was going to pretend I made these up myself when I show you
Is
later.
it a flick book?
Well, no, it's not a flick book, but the graphics in here are really cool.
Why'd you get sent that? Because you're insured with them, or?
Yeah, I think I've got policies with them, and they just asked me. I have got policies with them.
Yeah, they asked you what you.
I'm not plugging them
what
at all. No, I'm not plugging them. I'm
you obviously haven't made a claim with them yet, otherwise they wouldn't have sent you that.
That's a bit sort of mean.
Yeah, it's very true as well.
See this one. What do you think this is? I'm not. You can't obviously see it. Hopefully.
No.
So the big blue area here is the US.
Colour of your kitchen. It's a colour chart of your kitchen.
Big blue area is the US.
Yeah.
And the rest of the world is on the other page. So
in terms of COVID.
No. Arms race.
Oh Jesus! How many people own guns?
Oh yeah, exactly. We've got all this war on words, which sort of China may be winning. That one as well.
Global. Have you done any work? What have you been doing last 2 days?
Just reading this, mate.
Yeah.
global holding of US treasuries.
It's all in Japan, is
it? Yeah, Japan and China. They've got all the US treasuries. US just going to turn around and say, no, we're not paying you. So unlucky, son. And there was one really scary one talking about global warming, like everyone does. Bores us to death with global warming, which is just made up, I'm sure.
All the aliens are in the South Pole anyway, so they'll soon be discovered as well once the ice
what's going on here?
There's a good one here.
No, what's that? Looks like a point and figure chart.
That's a spike, isn't it?
That is labour lost, or the spike in US jobless claims. Look at that. But now I've showed you that. I have
this is taking a real turn today, isn't it?
This is.
My trade might come back on side in a minute.
Boiling point, the last 1,200 years of global temperature. All there, all ice age. Oh, bit chilly. Warmed up a little bit. Oh, it's getting a bit colder now, son. Never mind. Don't worry about that. I'll put the heating on.
Oh, wow. What's that one?
That's now. That's us now. That's what we've done. Globalization.
How big is that spike over?
That's us cutting down trees.
That spike's over about sort of like, what is it? It says Paris Agreement on climate change has come in. It doesn't really say how long it is.
Can we get on? 1,200 years. I'm down half an hour already on where my
Steve must be waiting for a trade.
Listen, you'll be down 1 hour by the end of the day, E. I guarantee it. So don't worry about it.
I was going for 8 hour. I'm going to have to change it now.
Gun to the head from yesterday. Let's just try and get. I might have to mute Steve in a minute.
Get rid of him.
This one. What's that? That's the virus.
That's a Spanish pandemic.
Yeah.
One of those.
No, that
Spanish flu
is the Black Death.
Black Plague.
200 million people.
It's
200 million people, and this is little COVID here.
Oh, come on!
Insignificant.
Right, 7 points. I want these 7 points back.
Okay, gun to the head yesterday.
7 points.
It was very boring. I had a long on New Zealand dollar, US dollar. Nothing happened. 7 ticks down, 0.21R. Steve, you sold Bitcoin. That didn't do an awful lot either. Down
it did. It was.
0.15R.
I was on side for ages, so don't.
Yeah, you were, but then it, in typical fashion, came back. So, yeah, Ian, clucking to get this trade on. What you got?
Euro yen. Look, that's where I set it. 81. It's now at 73.
No, I believe you. I don't believe you.
No. Little dotted line is my profit target. 126.74. 126.74. I'll keep that 03. 90. What's that changed? Look at that. It's completely changed now.
Oh,
anyway,
come on. You can do it.
was getting short at 126.74, stop at 126.90. That can't be right. Is that right? 126.03 is the target level. 4.4R.
That'll do. Steve, have you got one?
I have. I've got one.
Go on in.
It's gonna. Yeah, well, this is obviously what I did yesterday, Bitcoin, and just looking for a little bit of a retracement. It hasn't happened. I've sort of got, I don't know, I've just got this feeling that Bitcoin's going to explode higher. Obviously, Elon Musk coming out and saying they bought 1.5 billion's worth, which, funny enough, has meant that they're sort of like 1.5 billion is now worth properly. Yeah,
second biggest corporate shareholding of Bitcoin, isn't it?
Yeah, and it's sort of like, it probably makes me feel like, let's put the stop in anyway, 45,000.
My mate had a 20% gain in Theta overnight.
Ah, nice.
Nice for him.
Well, don't know where to put the profit target. I mean, we've got to go for like at least 60,000.
You buying it today then?
Yeah.
Oh God.
Yeah. I mean, that's mental, isn't it? But I sort of like things like moves like that can happen quite quickly. I don't know. I just sort of like feel like well, from a technical perspective, it's not just a feeling. From a technical perspective, a little bit of a bullish flag here. So measure move target on that. Let's be a bit aggressive and a bit sort of like make it sound a bit sexier than it is. They are up to there.
Yeah, it's
55,500. I might even just change it to there. 55. What's that? Still 5 to 1. So getting long of Bitcoin at 46,690. Well, let's call it 46,700.
We get longer.
I'll give you some of the spread away. And the stop is at 45,700 and 55,700. Because I like round numbers. I'm a bit paranoid about that. 9 to 1 risk reward on that bad boy. Yeah, I've just got a feeling you're going to get a lot more companies coming out with that sort of same bulletin and headline. We're buying crypto, getting ready for the cryptocurrency, because dollar's looking a bit flaky. And then dollar collapses and then it goes up naturally anyway. So happy days.
Okay, good luck. I'm keeping it quite boring compared to that.
Looking at real.
Yeah, or maybe real. Euro, New Zealand dollar. So just very short-term charts here. Looking at the 60-minute chart, I've got a bit of a range that's formed here. Prior to Steve going on his data burst there, which I really enjoyed actually, Steve. And if you don't do that again tomorrow, then I'll be disappointed. I'm looking for more data sets, more graphs, more graphics.
Yeah, do it. Let's do it.
So what we did post there at between 8 and 9 o'clock was a gravestone doji, which often signals the death of a move. I mean, obviously we're talking about very short-term timeframes here, but it was coming up against this resistance at 167.83. It's having a little bit of a go now, which I'm not too excited about, but I'm still going to go with it. I'm going to sell at 167.69, stop loss at 168.20. Targeting a move back down to the lower end of this tiny range here at 166.40. So looking for about 2.5R on that this morning.
I'm not going to wish you luck on that because I'm long of Euro New Zealand.
Okay, well, you're looking for a breakout of that range then.
Yeah.
Okay, we shall see. In terms of data today and what we can be keeping an eye out for, as we said and have said a couple of times this week, it's very quiet. Or has been very quiet, but today we've got US CPI, which we're expected to see prices rise 1.3% year on year and 0.2% month on month. That's out at 1:30. We've then got crude inventories at 3:30. Previous readings saw a fall of 994,000 barrels. And then this evening, we have the Australian Westpac consumer confidence figure. The January reading was at 107. That's due out at 11:30 UK time. Anything else you've seen on the calendar, Ian, that we should be keeping an eye out for?
Fed Powell is speaking at 7 o'clock.
Yep, and Andrew Bailey speaking today as well.
At 5 o'clock. And Bank of Canada Lane at 4:30. They're all having a go.
So a fair bit going on then on the central bank front.
Indeedy.
Okay, well, let's wrap it up there then, gents. Hope everybody has a good day. Good luck with your trades, and we'll be back tomorrow morning.
Yep.
Cheers,
Enjoy
everyone.
it. Cheers.
Bye-bye.
Bye.
Bye.